Hey, everybody, welcome back to another edition of Market Talks with Dr. Stocks. Today is Thursday, the 1st of May. Happy May. Happy May Day. And we're coming to you live from the options room this time. So I usually am coming to you live from the live trading room where we trade stocks, ETFs, and micro E minis. Over here in the options room, all we do are options. So it's a little different approach and happy to be with you today. Hope everyone is doing fine. We're going to take a look at some charts here in just a minute. I'm going to take chart requests. But the first thing I want to show you is a site that I use to monitor put and call flow throughout the trading day. Before we get there, let me just remind you that if you are interested in subscribing to one of my award-winning, the one of which is an award-winning newsletter. It goes all the way back to October 2002. It's been published every market day since then, called Trend Trade Letter. Go over to drstoxx.com. That's drstoxx.com. Click on the subscribe button. You can click on Stock Pick Advisories. You'll find the Trend Trade Letter, the ETF letter, my Momentum letter, which is my most profitable service of all the services we have. We also have two live trading rooms over in Discord, the live trading room, stocks, ETFs, micros, and the live options room, only options all the time. That's all for that. Let's get over to black box stocks. So I'm going to show you, where did it go? I am going to show you, if I can find it. Why can't I find it here? Let me just let's just click on the charts. Let's go over to FinViz real quick. So FinViz is a great one-stop shop for all things trading. It has some really nice free trading screens that you can use. You can program them yourself, and it gives you economic data in a heat map and market internals and all kinds of good stuff. Okay, black box stocks, black box stocks. Okay. No, I don't want the ticker symbol. Why is this? Oh, I see what I've done. Okay, never mind. I was looking at the wrong thing. Let me pull this down. Here we go. Okay. So apologies for the delay. Let's take a look. So this is Black Box Stocks. It is a software. You'll have to have a membership in order to access this stuff. But this is where I kind of hang out in between trades to see what big money traders are buying and selling with respect to the options market. When you start to see an unusual ticker symbol getting hit with a bunch of sweeps and a bunch of blocks and some really nice sized trades, and they're giving you, maybe some out of the money upside for strike prices, and you've got some time involved, that's worth paying attention to. Now, you're going to get all kinds of signals on Amazon and Microsoft and Apple and Nvidia, right? Every day, everybody's trading those in big size. But when you start to see ticker symbols that don't show up that often, it's important to pay attention to that. So what I like to do is I go to the filter here. I click on stocks and ETFs, puts and calls, all flow colors. So these are different types, right? So a big block means a huge guy is coming in and he's buying a whole bunch of options, same ticker, same strike, same expiration. And a sweep is where somebody comes in and buys a whole bunch of little blocks all in a row, like boom, 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 same ticker symbol, same strike, same expiration, but in smaller trades broken up, they get sent in really fast to the market. That's kind of a desperate thing, right? If you have to get in, you're going to do a sweep. If you're thinking maybe more long term, you're going to do a block. So I also put this at a minimum of $100,000 per trade because I want to see only the biggest ones, and I can raise that if I need to. And I only want buys on both puts and sells. I'm not looking for people that are selling calls against their shares. Not interested in that. I'm not looking for people that are selling out of the money puts, maybe for a little bit of income. Not interested in that. I'm only interested in guys that are directional trading, right? They know the market's going to go up. They're going to buy calls at the ask, even above the ask, right? If you see AA tagged to the entry price, you know that that's a desperate move. Okay, so let's go ahead and take a look. So we've got all kinds of stuff coming through, and here's one I don't see very often. This is a ticker symbol in a steel play, X, right, which is U.S. Steel, I think is the name of the company. Been around a gazillion years. And let's just click on that to see if there are maybe more trades today that happened in the same name. And in fact, there are two. One came about 1:52 this afternoon. One just a few minutes ago, 2:15. Expiration going out to November in one case, and very close, May 16th. That's a couple of weeks away in the other case. Strike prices. Where's the current price? Spot price is at 44. So this guy is deep in the money. He spent $250,000 on his trade, and this guy's a little bit out of the money, and he spent almost $200,000 on his trade. Okay, nothing really out of the ordinary there. And if I were to see this, however, develop throughout the rest of the day, maybe 4 or 5 more of these trades, I might be interested. If I see this again tomorrow and again Monday next week, I might be even more interested. So we'll just kind of file that in the back of our head, and we'll see what else we can find throughout here. Yeah, so Avgo is one we're in actually, and it's doing okay today. It's a semiconductor space. We're long this shares in the other room, the live trading room. So let's see what the market is thinking about Avgo today. Well, you can see there are some puts in here, and there are a few more calls than puts. Let's take a look at the size. So put 157, put 177, 142, 1.1. Okay, 1.1 million on the side of the puts is a little bit more of a bearish posture than these guys down here in the hundreds, right? But here's a call play at 800,000. Here's a call play at almost 400,000. Between those two, you've got over $1 million, so kind of evens out, right? And I'm interested in seeing, are they going out with time, right? Do they see a good sustained move in Avgo for the next 3 or 4 months? Or is it just like maybe it's a day trade, maybe it's a trade over earnings, maybe it's they know some news release is going to come out in a couple of days, so they're just doing a short-term thing. And you can see both here. You're going to see 5.2, that's tomorrow. That expires tomorrow. So this guy is very hopeful. He's going deep in the money, however. This guy has a couple of weeks. He's also a little bit in the money. And this guy with about 3 weeks is going out of the money. His strike price and the calls are above the current price of the stock. So again, a bit of a mixed picture here, but leaning bullish. And if you're interested in trading Avgo or owning Avgo, or getting into a new position or adding shares to an old position, then this is good information to have, right? Very good information to have, at least for today. The whole picture could change tomorrow. That's just how it is with options trading. Also, the other thing I like to do is I maybe click on something like SPY. Let's see how people are feeling about the overall market. Now you're going to see these, you're going to get a string of calls when it's starting to move higher, and you're going to get a string of puts as the SPY is tailing off. A lot of these are day trades. A lot of these are guys just trying to make a few bucks on that little momentum in price. So we're not that interested in these sweeping day trades that are coming through. I'm a little more interested in sizable trades on SPY. Let's do this. Let's get rid of the 100,000. Let's go up over 500,000. I'm interested in sizable trades on SPY with time. All right, you can see some of these big money, right? 3.5, that's a very big trade. 6.8, that's a very big trade. And they're all 2.8, that's a very big trade. They're all in the puts. So there are some guys who are buying big sized puts today. And let's look at their expiration. So this one, the biggest one, is out there to January of next year. January, not January of 25. I'm sorry, not January of 26, January of 27. All right, so what is that? You know what that is? That's probably a hedge fund, a fund that needs to to reduce risk, reduce volatility in their portfolio. Maybe their clients are calling up and complaining about the volatility in the market. And so they're adding in some insurance. That's really all that is. It's not a bearish play by any means. It is just a way of reducing volatility. So as the market comes back in, you're going to see these puts go up, and that balances out the loss on the market pullback. So it's not a directional trade. It's just some insurance. That's probably what the 275 is as well. That's going out to January of 26. So anyway, you can see how the flow is giving us some interesting information, some of which can be useful for trading, not all of which. You have to kind of know what you're looking for. One last thing I'll show you here is this alerts tab. So if you click on the alerts tab, you're going to get in real time very unusual options plays that can be on none of these are on the ETFs, so they rule out the ETFs. These are all on stocks, and you're going to see all the major names in here, right? Tesla and Nvidia and Microsoft. But these are they're all unusual for whatever reason. Either the volume was unusual, or huge buy coming in way above the open interest, or a lot of sweepers coming in really fast, or a massive block, right? There are all kinds of different, like these large bullish, that's a massive block. The repeater bullish is a bunch of sweepers coming in a row. And I think those are the main two types. Yeah. And you'll see the ticker symbol when it came in, the expiration date, the strike price, the kind of trade that it was, how much they paid, and the high price since that trade. Is it above or below? And then the current price. So it's really interesting to kind of see, how are these guys doing? These are unusual trades, probably from professional money managers or professional options traders. And if we sort on gain, which is, can we do that? How do we do this? No, I don't want that. How do we do this? Here we go. Yeah, sort by gainers. You're going to see that they're not really doing that well today. As of right now, there's only a couple, just a handful that are even profitable. There's only one guy. It was a Microsoft put. He's made 20%, right? Or at least right now, if he cashed out, he'd be making 20%, which is not bad. But if you scroll down, you're going to see a lot of negatives down here. So not a very good day for options traders, I'm afraid. All right, but that is what it is. Over here, I like to keep track of bullish flow and bearish flow. What are the ticker symbols that are getting hit the hardest today? You've got Nvidia right at the top, 20 million in major flow coming in. That's bullish flow coming into Nvidia. Microsoft number 2. And on the bearish side, we've got Okta, which is interesting. That's a cybersecurity play. Maybe they have earnings out tonight, or maybe they had earnings last night and it crashed. I haven't kept track of Okta. Carvana is number 2 on the list, AMD number 3. All right, that's all we want to talk about that. We will come back to black box stocks on occasion, especially if I find something that's of interest. So let's start with daily charts. Got a big crack in gold for some reason, and I'm not sure why. We had very bad economic data out yesterday, negative GDP, blah, blah, blah. And then we had more negative data out today. Jobless claims. Keep an eye on jobless claims. I think it was around 240 this morning. Let's take a quick look, because I can give you a number to mark. Yeah, it was 241. When it hits 250, 250 is kind of a line in the sand for worrying about recession, right? These are people that just got fired this last week. They're filing a claim for unemployment insurance, and they're new. They're new. It's a new claim, and then you have continuing claims. And if that number keeps growing, and it has been growing lately, that's also a problem. But 250,000 new jobless claims is typically the number and above that you get when we are in a recession. We're at 241 this week. Now, we were, 150, 140, 130, 125, 160, 170 a while ago. Then we started getting up into the low 200s, but 250 was never hit. We're almost there, however, and I suspect by next week we're going to see something above 250, especially again if the tariff narrative doesn't change. Now, the market is not priced in recession. Market is in denial about recession. There's a lot of fear out there, but it hasn't yet priced that in. So if we do get continuing weakness in the job market, especially if the Fed does not cut rates this month, or I think if they only cut 25 basis points, I think you're still going to see a pretty volatile May. My map for May, and I, I hesitate to offer this because my map for April didn't work out all that well. I had April as a nice, healthy bounce back. We did get that, but I had it rolling back over and heading back to the downside in the last week. Well, we didn't get that. Instead, we got more upside. So let's take a look at the charts. I think gold is going to bounce back pretty quickly here, especially if we do get continuing weakness in the labor market. We get a big report tomorrow, right? Everybody's going to be watching those jobs numbers. Let me see what the expectations are. It should be pretty low. So non-farm payrolls, you have your private and public government jobs and private together, and then you have your private payrolls. Let's just look at the one together. So last month was 228K. That was above expectation. I don't know why, but it was. That's fine. We want to see good jobs, a lot of jobs created. That's good for the economy. This month, however, we are expecting that number to be almost cut in half, 130. And I suspect, given the ADP that we saw, which was way down there, 62,000, half of what it was expected, I think we're going to see something similar with the non-farm payrolls, maybe 70, 80,000. It's going to be, I'm pretty sure it's going to be a red number. I could be totally wrong, but you also want to look at the revision. So they're going to revise last month, and I bet this 228 number does not stand. I think it's probably going to come down a fair bit. We also want to look at the unemployment rate. They're expecting it to hold steady at 4.2. I bet we get 4.3. And really, those are the only two things. So we'll look at those tomorrow. We should see, I'll be very surprised. Let's put it this way. I'll be very surprised if we don't see some continuing weakness in the labor market. And that will show up tomorrow. It showed up today and it showed up yesterday with the ADP, and it should be confirmed on Friday. Okay, back to the charts. Sorry, I always do this. I get carried away. All right, so right in here, there is this yellow box. This was a very major, if we go back further, you'd see other areas of support and resistance. It's a big SR flip zone. And by SR flip, I mean that at sometimes that line right there, around 5,500, 5,550, that line acts as support when price comes into it from above. It acts as resistance when price moves into it from below. And I expected, and a lot of other people, frankly, expected that that line would hold firm, that we would see a flip from from moving up into it to then falling back down again. And I expected that to happen this week, not even today. I expected it to happen Tuesday, Wednesday. Now, yesterday was Wednesday, and yesterday did, in fact, trigger a bearish sell signal in the morning. And then the bearish sell signal, and by that I mean it took out yesterday's low. That's usually when you hit and run into resistance from from below, and you're in a downtrend. We are obviously in a downtrend. Why? How do we know that? The LRC is falling. Where are my moving averages on here? I don't have moving averages. Hold on. Let me. I don't know what chart this is. Let me refresh here. Just give me a moment. That's better. Okay, so I'm going to get rid of this indicator down here. I'm going to put on the MACD, which is a very standard momentum indicator. And we can see that this is the S&P 500. So the S&P 500 has been in a major sell. Here's my zone right there. has been in a major downtrend since Trump announced the tariffs way back at the end of March, and it was a very fast and furious crack to the downside. Now, when the market is downtrending and you get a relief rally, which always happens, some of the best rallies happen during bear markets. Relief rally that comes up into levels of resistance, former support levels of resistance, that can come in all kinds of forms. Major moving averages, price support, those are your two major ones. It usually rolls back over and then we get a new leg lower. So here's your first leg down, here's your relief rally, here's your second leg down, here's your relief rally, here's your third leg down. Oh, we didn't get a third leg down. No, we got a higher low. That is a very bullish thing, very good thing, right? The market is expressing that it has already priced in all the worst news possible. We got to rally back up. We hit the 50 period moving average yesterday in the middle of the day, and then it was quick flash down, taking out yesterday's lows, Monday's lows, Friday's lows, right? We took out 3 whole days of range lows, and everybody, of course, either had to sell their longs on stop or got short. And hold on. I'm just going to leave that. Okay. Now, today, much more positive on the bullish side, because instead of reflecting that bearish signal that we got yesterday, we are seeing bullish follow through. Whenever the bears get trapped and the bulls have the strength to rally back up above the highs of the previous day, especially the day that gave you the bearish signal, that is a very good sign. Now, we've had 7, 8, I think today is 8 days in a row of upside in the S&P 500. And I don't know, the record is something like 12. So it's very possible that we'll continue to see a bit more upside. But I do think maybe it's fine the rest of this week. We do have earnings tonight, very important, Apple and Amazon. And then tomorrow, the jobs data. Maybe it's not quite as bad as I'm thinking it might be. Okay, that gives us a little bit more hope. But at some time next week, I do think we're going to see some reality checks on the market. I'm very surprised we haven't seen it until now. And frankly, okay, that's fine. We can play the long side as well as the market is dictating what it wants to do. Don't want to fight the market. I was trying this week to get us into some short positions in anticipation of that rollover, which triggered yesterday and then didn't follow through. It is what it is. Right? It is. That's just trading 101. All right, but bullish follow through today. However, we're still in a downtrend. The 21 is still below the 50. The 50 is below the 200. We're in a downtrending LRC. We're coming up into the blue zone, which is typically where you start to see it's 2.0 standard deviation away from the mean of the trend. And that's typically where you start to see weakness begin to build in, right? Like right here. Same thing happened back at the top of that March high. All right, let's take a look at the NASDAQ. The NASDAQ is up into the blue zone today, so we have to be a little more careful with the NASDAQ than we do with the S&P. It's also very close to the 200-period moving average. The last time it tagged that and rolled over, it was a serious rollover, very serious rollover. The thing that gives me hope that the bottom is in already is this higher low. So I've said this many times, at least in the other room. When you see a downtrending chart, a price of a stock or a fund or an index in this case, it's always lower lows and lower highs, right? You get a sequence of them. And then you get a higher low that takes out the most recent pivot high. That's exactly what we have here. And that is typically the bottoming process of the downtrend. And from here, doesn't necessarily mean we keep going straight up, but from here you tend to get some consolidation. You might get an inverted head and shoulders pattern. You might get a bull flag. You might get a pennant or a triangle or a base building here. I think we're going to get something like that, some kind of bullish consolidation early on here in May, maybe a little more downside in toward the end of May, and then a very nice June, as long as either the Fed starts cutting rates pretty aggressively, or we get some good negotiations, some good deals from the tariffs, and Trump is starting to backscale on those already. So we need more of that. We need more of both of those things. Now, this is the this weakness that I'm talking about in May. It should, technical analysis 101 suggests that it would only come back to about that level of the breakout, and then we get another leg higher. Okay, so nothing to get too concerned about. We will play this little pop as long as it lasts, but I think we're probably going to get a rollover up here on the Nasdaq, right around the 200 period moving average, because it's also a price high, right? They're right there because of the 200 is flat. Okay, so that's that. The small caps index is going to be your most problematic with respect to tariffs and uncertainty, bad jobs market, people aren't hiring. Profits are going to start getting squeezed. Margins are going to get squeezed. Supply chains are probably going to get disrupted, and on and on and on. And all of that affects the small cap group the most. However, all of that said, we do have, here's your high or low, here's your breakout move, here's your follow through, and we're starting to get already, in this case, we're starting to get some sideways consolidation. We're above the 21, we're still below the 50, and we're coming into the blue zone of a very sharply downtrending linear regression channel, and those kinds of things don't get overturned that quickly. So I think the small cap index for me is kind of a no-go zone for now, either long or short. We did try to short it, and yesterday again, beautiful sell signal that just didn't follow through. But and I wasn't quick enough on the trigger to take some profits. I think we had some profits in IWM puts, but maybe not. And we got stopped out of that one today or yesterday or the day before. I'm not sure. Anyway, it's a no-go zone for me because we're kind of in this no man's land here. It's just going flat. Everything is still falling. We do have a bit of a breakout. That's good. We're starting to see some follow through. That's good. But a lot of things can go wrong with the small caps. So Bitcoin is surprising me. After this red reversal bar yesterday, and that is a reversal bar because it took out the day before's low, in the blue zone of a downtrending LRC, that's selling 101, right? That's selling short 101. And it's only been upside follow through since then. So again, that could follow through, could come back to haunt it. Most of the folks I talk to about Bitcoin and in my pro trading group they're not trading Bitcoin. They all own Bitcoin. We all own some Bitcoin somewhere along the line. We have a big position in our wealth building portfolio in the other room. I have some in the family fund. But as far as trading Bitcoin, they're waiting. They're just in waiting mode to see how this plays out because it could very well crack and go to the south side. Oil, big sell-off. We banked a nice trade in SCO, which is the bearish version of long oil. We banked that yesterday, and it kept on going south, but today's a big reversal bar. This looks like oil wants to, go back up again on a double bottom. We have a double bottom. MACD is showing us bullish divergence, and you can see my divergence indicator down here showing RSI, stochastics, and OBV also have bullish divergence on this reversal bar. Oil looks like an upside trade from here. It should, but you never know. So gold is way off today, below the 21 period moving average. I think this is just a pullback, a little bit of an ABC pullback. Here's your A wave, here's your B wave, and now we're printing the C wave. Somewhere in the next day or two, it should kind of flatten out, and then we can look at maybe adding a GLD call position. Okay, yields are up today. We don't want to see that. We want to see bonds get back on track, and I'm just kind of scratching my head. I don't know why when there's recession fear, you should see bonds and gold do pretty well. They have been doing well, but not today. Not today. Bonds are falling, gold is falling, and either the market isn't worried at all about recession, or there's something else going on in the dollar rates, geopolitical stuff that is a bit beyond, a bit over my pay grade as far as factoring all that in. So let's just see where that plays out. Okay, so that's all I wanted to do on the indexes. I did promise I would drill down into the 2-hour chart, so let's take a look at that for the three majors. This is the 2-hour chart. Let's get rid of that line. And if you guys, members of the room, you want to start typing in your ticker symbols for stocks you would like me to look at, I'll look at them on the daily chart. Stocks you might be in, stocks you might be thinking about getting in. If you want me to give my assessment, and I'll be as honest as I can, go ahead and type those ticker symbols into the live option trades room. In the meantime, let's look at the 2-hour chart. Okay, so this is the S&P 500. On a 2-hour basis, because of the relief rally, we have an uptrending LRC. So on an intraday basis, things are pretty strong. Look down here at the volume. Big green sticks, not so big red sticks. That's bullish accumulation. Now, I have to caveat this here a bit because I know from statistics that hedge funds, money managers, professional money managers, big money managers are not buying this rally in. They're buying some, but they're not getting in. They're still at very low levels of exposure to stocks. They've been buying gold, they've been buying Bitcoin, they've been buying bonds, overseas stocks, European stocks, Chinese stocks, but not buying American stocks. Not very much. I mean, it is starting to tick up off the bottom, but we're not seeing the big spurt that you usually see when you know that the market is really bottomed out. You see all the professional money managers starting to plow into equities. We're not there yet. The confidence that we're at the bottom is not hit the professional money market yet. So this volume, have to take that with a grain of sand. That's mostly you and me, mostly you and I, retail traders. But that said, we have a breakout right here. There is your breakout, and it had a nice little consolidation for a couple of hours. You kind of want to see that. It gives chance for the weekends to get out. They take their profits, and the shorts are kind of given up and all of that. Couple of hours of weakness, and then the last 3 hours have been pretty much all upside. This is good. I think that the target for this, it's going to be the 200 period moving average on the daily chart. But here on the 2-hour chart, I think we could see this go all the way up into the blue zone. Not overnight, but over, a couple of weeks, get into like the middle part of May when I think is going to trigger some more volatility, but we could see this up at about 5,800. That's very optimistic. I don't know, and I don't think it will get that far, but 5,700 probably a where is the 200 period moving average? Let's take a look. Oh, it's way up here. It is up here. 5,770. So yeah, 2-hour, back to 2-hour. So 5,770. Let's just call that. It's 5,750. 5,750 for a top for this current run within a couple of weeks. That would be my map. The NASDAQ has actually a stronger chart. Here we've got a little more volume coming in. It's a stronger breakout. Look at this momentum, right? Boom, 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 boom. And then again, sideways consolidation, a little bit of profit taking, a little bit of some shorts positioning. You kind of want to see shorts starting to come back into the market because they're the ones that are going to have to cover really quickly when it breaks out to the upside again. So I think that this is healthy. This is a healthy little pause, and probably tonight, Apple and Amazon, they have not been doing very well on earnings for the last year. Maybe they're due. Maybe they're both due. In fact, I did read something this morning about Amazon. A good reason to be bullish on Amazon, even with earnings coming up tonight. So let's keep an eye on Amazon. And where is this going to go? Well, I didn't mark the 200. I don't think this is going to get all the way up into the blue zone before we have a significant pullback, but probably about 2,300. And then let's look at the small cap index. You can see this is a lot weaker, right? And we did have a breakout right there, but then we leveled out and created a whole new line of resistance that has been under, but now we're starting to get back up there again. So that's quite good. Yeah, that's quite good. Okay. Yeah. So this actually is for a short-term swing trade. I was saying, that small caps are a no-go zone, but I like what's going on here with the 2-hour chart. Maybe we can get into some TNA calls and hold them for a day or two. But man, I tell you, I'm so worried about what's going to happen on Friday. Now look, Wednesday we had some very negative data. The market went shoom down, shoom back up again. And when the market rallies on bad data, especially recessionary data, that's a bullish thing. We had some bad data out this morning too, jobless claims. You don't want to see that. ISM was a contractionary number, although it was above expectations. That's good, but still below 50, and that's recessionary. Market didn't care at all. It took it totally in stride. So when the market rallies on bad news, you know that things are probably going to carry on regardless of what happens tonight with Apple, Amazon, and the jobs numbers. Now, also consider last night we had Microsoft and we had who was the other one? Facebook. Both of them swung it out of the park in terms of double beat, raising guidance, and alleviating all kinds of fears during the conference call. It was Qualcomm that got hit really hard. I'm not sure exactly why, but the other two did really well. And so maybe the same will be true for Apple. I think Apple is probably going to do okay. Amazon, I'm a little more bullish on it than I was after reading that article. But okay, so that's all I really wanted to say. 2-hour charts looking pretty good for all three of those indexes. The daily charts, there's not really a lot of upside room before we hit that 200 period moving average and price resistance up there at the top. And I think that's probably going to be it on this current leg. But we'll see. We always take it one day at a time. All right, you gave me some ticker symbols. Let's go back to the daily chart. I'll do this really quickly because I want to get to all of them and I need some time. 252. Okay, I need to be out of here at 3 o'clock. So let's see what we can do. Nike. All right. Well, like almost everything else, downtrending. The bearish stack of MAs. You can't even get above the 21 period moving average. All of that does not look good. Earnings here bad. Earnings over there sold off after. And this big gap down, I don't know what happened there. Why did Nike gap down so horribly when it wasn't an earnings? That I don't know. I kind of want to know what's going on there because that seems like that has set. That has set a range, and we're right now in the middle of that range. Right. This is whatever happened there. Gave a revaluation to the company. The market is saying, no, you're not worth $64 a share. You're only worth $58 a share. And so it's going to get stuck in that range until that narrative changes. The one good thing that I like, and this is actually not bad, It's kind of like a good short-term trade, gives you a little bit of hope that range can break out. And that is, first of all, the MACD buy cross. When you get, some theory here, trading theory. When MACD is below zero, the zero line is right here in the middle. It is a bearish read, and when it's above zero, it's a bullish read. When you get very far away from that zero line, and then you get a bullish crossover, which is exactly what happened here, you tend to get a pretty good follow through on that. Pretty good follow through. Now that's bullish thing number one. Bullish thing number two is we do have a higher low. Remember, zigzag down. And then we get that higher low and then a breakout of the most recent pivot high, which would be up here. That's the end, right? Usually that's the end of the downtrend. The line for the lowest low is already in. Doesn't always work that way. Technical analysis gives you an edge, but it's not a certitude by any means. But that's what we're starting to see form here. And I do like this little kind of a little pattern here, right? So, and I mean little, but this is a bull move up, a flag move down, and then we should see, or we could, oops, we could very well see a breakout move to the upside from there. All right, so that's Nike. Let's move on. Snow, one of my favorites. I have some shares, and I'm a little bit underwater now, even with this rally. In the family fund, fairly new. I bought them about 6 months ago, and I don't know if I'm not sure if that was a great move or not, but I like what's going on here. It is outperforming the market. Um, there are a lot of big money funds that are buying into snow. If you look at what is the site that gives you fund buying? HedgeMind, I think it's called hedgemind.com. They keep track of who's buying what, and snow's been on their list for quite a while, and with some really good names, right? The funds that are doing really well are buying snow. That's a good sign. So this cracked, not only cracked that, here's your higher low, here's your pivot high, here's your breakout, but it also broke the downtrending pullback RTL, the resistance trend line. That's also good. 21's rising, about to cross over the 50. The 50 is still above the 200, so it's kind of in a longer term uptrend. And it's in big breakout mode today. Why is it up so high? Was it an upgrade? Was it good news on something? But the market likes snow, at least for now. I would say it's a little bit of a risky buy to get it up here. You're up near the blue zone of a downtrending LRC. You got to be careful, 2.0 standard deviation. But it's definitely a hold. And if I weren't in snow and I really like the company, which I kind of do, then I would be a nibbler here and maybe try to add in on some pullbacks. Yeah, that looks pretty good. All things considered, that looks pretty good. FRO, I have not seen this one. This is a oil and gas play, if I am correct. All right, so let me just check because I don't want to give you the wrong information. What is the space here? FRO. Yeah, oil and gas. Okay. So I kind of had the energy sector rolling over today with the oil falling so fast, but there are certain segments of the energy sector that can be impervious to things like inflation, the price of oil, and it's a picks and shovel play. This kind of thing. These are the guys supplying the pipes and some of the technology, and the I don't know what goes into an energy plant, but they build them rather than functioning on selling, distilling, drilling, those kinds of things. It's a little toppy right here. Volume balance going into this run, very good. And you've got the bullish cross of the 21 over the 50. We're above we're above two of the three moving averages. It's getting better, but you would want to see that line right there hold. And it looks to me like that may not happen. 17, of course, is resistance. On a closing basis, it's more like 1680, and we're not getting there yet. Now, if it goes sideways for a couple of days, builds a little bit of a base right around there, maybe goes up to 17, goes down to 1650 or so, bounces back up in between those two numbers for a couple of days, then you can maybe start to work in. It's a hold. I wouldn't sell it here. I wouldn't sell it, but if you are already long, it's good. I would hang on to that. But you're going to have to set your stop probably down here below the midline of the LRC just to give a little downside room. It's not a buy, in my opinion, today. I would wait a little bit longer if you're not in. PSQH. Okay, I don't know what the heck this is. I've never heard of the company before. And it's really a penny stock. Anything below $2 a share is, in my book, a penny stock. And I'm just going to pass on that one. Without knowing anything about the company, the chart is just saying, bye-bye, see you later, we're going to zero. It looks that way. Everything's falling. Yeah, okay, let's move on. Nike, FRO is shipping. Okay. All right, guys, I'm going to let you go. That looks like all. I'm going to produce the video. I will give you a link in the main room, and then we'll get back to trading the last hour or two together. God bless everybody. Have a great rest of the afternoon. We'll see you in a little bit. Bye for now.